Hello everyone, this is Bennett Forrest of Keller Williams Realty. You are watching the first in what I hope will be a series of video blogs all about the home buying process. I'm a buyer specialist. I'm located in West Hartford, Connecticut, but I serve all of Central Connecticut, and many of the tools and information that I provide in these video blogs are applicable to people buying a house anywhere in the country. So I hope you'll find this helpful, and my goal is to keep these to only 2 to 3 minutes so you don't have to take too much time out of your busy day, but hopefully you'll take a couple minutes and watch this, and you may even learn something. So as a buyer specialist, people come to me and they always want to know, how much house can I buy? And what many people do is they start on a website like Zillow they look up a property and they see the pictures and it looks great, and they see it's $299.9 and they see the mortgage payment is $1,077. And when they find out what everything else that's involved in a monthly payment, they get a little bit of sticker shock. So what I like to do is first sort of tell the difference of what this mortgage payment is and what your monthly payments are when you buy a home. So yes, this is your mortgage payment, which is roughly $1,077. Now, we have an acronym we use in real estate called PITI, P-I-T-I, which stands for Principal, Interest, Taxes, and Insurance. And that's really using those four characteristics are really what make up your monthly payment. So this is the PI part. This is the principal and interest that you're paying the bank on the amount of money they're loaning you. So let's take a look at my spreadsheet that I have, which is pretty basic. Not everyone wants to look at a lengthy spreadsheet, so I try and keep it pretty simple. But basically, we're taking the house that we looked at a second ago, which is roughly, for sake of easy numbers, $300,000. Now, everyone's interest rate is going to change depending on the credit rating, the market conditions, etc. That's for another blog. But for the purposes of this blog, it's going to be an 80% loan to value, which means you're putting 20% down. So you take a $300,000 house at 4% interest, and your monthly mortgage payment is $1,146, and that's pretty close to what Zillow's estimated. They must have been using either a lower interest rate or some other factor. What it doesn't take care of is the TI in PITI, which is taxes. Now, this particular house, as you can see, has $43.71 in taxes. And your insurance, a good rule of thumb is about $100 a month for a single family. There are, of course, other factors that affect that. And in this case, we're going to leave out our utility costs or your expenses. We're also going to leave out PMI, and that's insurance for another topic. And you get to $55.71 total expenses, which breaks down to $464 a year. And if you take the principal and interest, which is again the PI, and you combine it with the TI, you get $1,610 a month. So this house that we saw on Zillow is not actually $1,077 a month, but more like $1,600 a month. So when you're looking at a home and you're trying to figure out your budget, make sure you start with not just principal and interest, but also taxes and insurance. That's going to be it for this video blog. Stay tuned for more. Of course, if you have any questions about the buying process, reach me at the contact information listed at the bottom of the screen. Thanks for watching. I hope you enjoyed it.